Hey everyone, welcome to Base Stages and Phase Analysis. And first of all, what is a price base? Well, essentially it's a consolidation period where the stock goes sideways for an extended period of time, usually many weeks. And usually it's caused by a prior uptrend, which then causes enough profit takers to introduce supply to the market, which causes the price to decline as that supply is introduced before there's enough accumulation to cause the stock to move up again and potentially restart the uptrend. And counting these bases is a great way to determine whether a stock's run is still kind of new or it's getting a little bit extended from that first stage base. And there's kind of a lower probability setup that new breakouts and new moves up will continue because there's that lack of institutional accumulation. So how do we determine whether a stock is still early on in its move? Well, basically, we want to be focused on first stage and second stage breakouts. These are the highest probability setups. And when we get to later stage bases like stage 3, stage 4, stage 5, stage 6, if we get that far, breakouts are a little bit too obvious. And institutions usually have their positions for much lower, and they might even use those breakouts to distribute stock and decrease their position. So we really want to be focused on early stage bases in base 1 and base 2. And what is the kind of usual price move from a base? Well, the average is about 20%, 25% from a first stage base. And you can see an example here. The stock bases goes sideways, moves up 25%. This starts a stage 2 base, and we got another kind of cup shape here, VCP, where we break out and we gain another 20% before forming the stage 3 base. So once again, the average move is about 20%. And keep in mind what stage base you're currently in, because that could give a great kind of idea about the stock's life cycle and how much further it has to potentially run. So how do we count these bases? Well, the first stage base is obviously stage 1. Then when it moves up about 25% and forms another consolidation, that's a stage 2. And then for each time that it moves up 20% and forms another consolidation, that forms another stage base. And to reset the count, basically you have to have an undercut of the previous base. So right here, it undercut this stage base, and this consolidation, if it forms up, would then become a stage 1 base and potentially could reset the stock's run and allow for another strong uptrend. So that is base stages, and now let's move on to stock phases. So this is another way of kind of determining the life cycle of a stock and kind of where you are within its run. And this is an adaptation of Stan Weinstein's stage analysis, but we're changing that terminology to phases instead of stages just to differentiate from base counting. So keep in mind, Stan Weinstein calls this stage 1, stage 2, stage 3, stage 4, but we're changing that to phase 1, phase 2, phase 3, and phase 4. And how do you differentiate between phase 1 and phase 2 and the other phases? Well, you want to use a longer term moving average like the 30-week moving average. And a phase 1 is characterized by the stock oscillating back and forth between a flattening 30-week MA, usually after a longer term decline. A phase 2 is the stock beginning to trend above an increasing 30-week MA. Phase 3 is kind of a topping phase where this line starts to flatten again and we oscillate back and forth. And a phase 4 is when the stock begins to decline below a declining 30-week MA. So a phase 3 can turn into another phase 2 if this takes off and the MA starts to curl up once again, or it can transition to a phase 4 as we see right here. So as cancel investors, we want to be focused in on phase 2 and buying breakouts early on within that phase, usually stage 1 or stage 2 bases. And once a stock begins a phase 3, depending on your time frame, you might want to exit at least part of your position, and certainly we don't want to be involved in a phase 4. This is when the big declines happen, and instead we want to wait for it to base, form a bottom, and potentially start another phase 2 uptrend. So here's a real life example with NVIDIA. We've got a phase 3 here transitioning into a phase 4 as it decreases from around 250 all the way down to the 100s. Then it forms a phase 1, and then this is when we want to get involved in a nice phase 2 here. You can see it rebounds off the 30 here during the March correction and continues on with a strong uptrend forms a little bit of a phase 3 here, but it looks like this is restarting another phase 2 uptrend at this moment. So in terms of a summary of base stages and phase analysis, base counting and phase analysis are two ways to determine the stock's life cycle. And we want to focus on stage 1 and stage 2 breakouts, which are more early stage. And we also want to be focused on phase 2 uptrends. That's when the majority of the greatest winning stocks of all time made their strong advances. So that is base stages and phase analysis. And I'll see you guys in future videos.